Welcome back. You're still with us on Startup Street. Now, Cactus Ventur Partners is a purpose-driven early growth stage venture fund with a focus on technology and D2C startups in the early growth stage. The company has raised 350 crore rupees in the initial close of its maiden fund and will now focus on startups in the Cleantech, health tech and B2B Saas sectors. How does it plan to deploy its funds and which are the sectors that excite them? Joining us on the show to discuss exactly that is Rajeev Kalambi, the general partner of Cactus Ventur Partners. Rajeev, thank you so much for joining us on the show. In fact, I should say welcome back to CNBC-TV18. How does it feel to be back on the other side of things? What's the journey been like?
Thank you for having me. And yes, it's been 20 years. I don't know if people are aware, but I was part of the original founding team at CNBC-TV18, and I sort of worked to set up the research backbone for the channel. So it's been great. I, of course, moved on to focus more on the business side of things than on the media side. And it's been great, a good 22-year sort of period since then. Thank you. Thanks for having me.
Absolutely. So now let's talk about the business side of things. You've announced the initial close of your maiden fund at 350 crore rupees. Now, General Partners Impact has in fact committed 15% of this. So what conversations did you have with your investors and how are they viewing India's startup landscape?
Okay, so there are two questions there. One is on the conversations with the investors. So what we did was, as a first-time fund, we needed to sort of work with the perspective that, we needed to show a lot more skin in the game, which is why the 15% contribution. Typically, fund managers put in roughly 3% of the contribution, sponsor contribution. We've put it to about 5x that amount, just to show the kind of skin in the game that we have. Conversations with investors have been very, very encouraging and fruitful. We've managed to raise 350 crores in a very, very short period of time. And much of this capital is, of course, about 50% of it is international and about 50% is domestic.
So investors still clearly excited about the India story. Now you're primarily going to focus on clean tech, health tech and B2B Saas companies in India. We'll get into it. We'll delve into that further. But what excites you about these sectors?
Investments typically in the venture stage need to look at a longish horizon. And what we were looking at is which are the sectors that we see are going to be long-term trends, imperatives, if I may use that word, for investments in India. And we see that health is perennial. There's always a need. There's a lot of technology that's coming into that space, a lot of applications. So that is one area we felt from a secular perspective is going to sort of continue to grow. We see the clean tech and the climate tech imperative. The planet needs that. We see a lot of innovation in that space, right. And we feel that's where we can put in a lot of our sort of interest. The third is, of course, business to business SaaS. India, of course, has staked its claim on the international scene where B2B Saas is concerned.
Absolutely, yeah.
We've seen the Zohos of the world, we've seen the Freshworks of the world, we've seen a lot of other companies giving even the likes of Salesforces and all, run for their money. We see a lot of companies coming up in this space. That's the three key trends within the tech sector that we felt were going to be secular in nature and something that we would like to back.
Absolutely. In fact, you said you're seeing a lot of innovation in clean tech. So what are the verticals within the sector that you're specifically looking at?
So the clean tech space is it's a sunrise industry. It's at a very nascent stage, right? And there's so much happening across the value chain, all the way from the OEMs going all the way back downstream to the recycling side of things. We did a little bit of an analysis across the value chain, and we felt that at this juncture, given our strategy, it made sense to focus more on the recycling side of things rather than at the downstream side of things. Which is why, we've also gone ahead and made an investment in that space. And it's doing very well for us.
All right, so you've already made an investment in that space. But moving on, the number of startups from Bharat has grown manifold. So what do you make of the Bharat opportunity? Is that something that you're looking at investing in?
So in our minds, we are not segregating the market in terms of India versus Bharat.
Right.
We are looking at business models, in their own right, saying that, okay, what is it that the business does? Who does it target? What are its prospects? And we evaluate each angle. So if there is a model which is catering to Bharat, we would evaluate that to see what kind of prospects that model has versus, if there's someone is just saying, okay, we're going to focus only on the top tier, maybe 250 million to 300 million population of the country, we'll look at that model as well.
All
Although,
right.
there is this opportunity for both in India.
All right, so there's opportunity for both. And like you said, we've seen the Freshworks of India. Now, the SaaS story has only been booming, so especially the cross-border opportunity. So how do you see this story playing out?
Oh, that's definitely an integral element of our strategy. We like to work very closely with our founders. The understanding is very clear that founders tend to be very market focused, go out, bring the business in. What we are going to do is work with them to bring technology to applications, right? So tech-based scaling, we're going to do a lot of branding and marketing, but more importantly, we're going to take them international. The three of us, the three partners, Anurag Goyal, Amit Sharma, and I, all three have international experience and networks, global networks. So for each of our portfolio companies, it's essential that we take these companies global.
All right, so you're going to help these companies go global. But what are the ticket size of the investments that you're looking at making? And how many startups will you invest in? How soon will you start deploying these funds?
So as part of a strategy, we look to invest in Series A and Series B stages. We're looking to invest about $3 to $5 million in the first stage, which is in Series A. We keep a reserve ratio about 1:1. So we look to double down in the next series, which is Series B. So on an average, we're looking to do between $8 to $10 million per transaction. We are very focused. We are not looking to do too many deals. So typically in a $100 million fund, venture capital funds typically do, good 20 odd transactions, 20 to 25 transactions. We're looking to keep it focused at about 15 transactions. And we've already done 5. And by the end of the year, we are looking to do a couple more. You can't give a fixed number saying that, okay, we want to do these many transactions, because it all depends on the quality of the transaction. In addition to the quality of the company, it also depends on the deal, right? So it's a mix of both that finally, ensures that a deal culminates. So it's difficult to give you a number, but we have a very, very interesting and, long pipeline. We tend to be very discerning. So we are going to sort of spend a lot of time with the founders, understand the strategy, help them think that through, build it out, and then sort of partner with them.
All right. So sort of partner with the companies to help them grow. And you've already invested in 5 and looking to probably do another 15. All right, Rajeev, thank you so much for joining us on the show, but we're completely out of time.
Just a small correction. We're looking to do a total of 15.
Total of 15, yes, including the 5 that you've already done.
Correct.
All right. Thank you, Rajeev. Thank you so much for joining us on the show today.
Thank you for having me.